DeepSeek pretty much messed up the AI game on Monday, January 27th, in a huge way, with tech firms suffering its biggest drop in US stock market history. So I heard DeepSeek popping up like crazy on January 27th and took a second to figure out what the hell is DeepSeek. So to give you the Coles Notes version, DeepSeek is the Chinese equivalent to ChatGPT, but it costs significantly less. It was reported first that it was 6 million, but that has since been debunked and reported that they in fact spent 1.3 billion, as the initial number reported didn't factor in research, development, infrastructure, and other essential costs. However, the leaders like ChatGPT and other US-based AI companies are reported to have spent about 250 billion. I'm hoping that's combined and not each, by the way. But nonetheless, this is a game changer, and a lot of stocks got impacted by this and dropped. Now, what makes this even more interesting is that AI impacts uranium mine businesses, and this is super interesting because I didn't correlate the two, but as I dug further, the reason for this is because chatbots rely on data centers, which are huge facilities with powerful computers. These data centers consume a massive amount of electricity, and this demand is expected to double by 2026. So nuclear power is a clean, reliable energy source that uses uranium, and uranium companies and mines like Cameco in Saskatoon, Denison mines in Toronto, and NexGen Energy in Vancouver benefit a great deal off AI chatbots, thus producing wealth geniuses like Tim Gitzel, who's the president and CEO of Cameco with a net worth of 41 million, David Cates, who's the CEO of Denison Mines with a total yearly compensation of 1.54 million, and Leigh R. Curyer, who's making a total yearly compensation of 13.8 million. All of these companies saw a dip in their shares when the DeepSeek fiasco hit the fan, with Cameco dipping by 15% on Monday, January 27th, while Denison Mines took a 10% drop from closing, and NexGen took an 11% drop on that day. Now you might ask, well, if DeepSeek is just another player in the game for AI chatbot, it still requires the energy and uranium, right? So why did these companies drop? And that's a great question. The reason behind this is because investors are unsure how much major tech companies will continue spending on AI, affecting energy forecasts due to how low of an investment is required for DeepSeek. For Cameco, when it rained, it poured, because at the same time, their mine in Kazakhstan was briefly shut down due to regulatory problems. Although production has restarted, the disruption made investors nervous. So what do you think? Are Tim Gitzel, David Cates, and Leigh Curyer wealth geniuses in the space that they're in, or will